Hey guys, welcome back to another video. In this video, we will go over the ICT Silver Bullet trading strategy, but before we get straight into it, let me explain why I haven't been releasing videos for the past 7 to 8 months or so. So as you may know, I have been spending my time building a trading software that you all can use every day to help you become better traders, and so for this reason I had to step away from making YouTube videos to commit my time towards that instead. Now that the software is very close to completion, I'm happy to say I will be making videos again every week. And I recommend that you all go to my website, the link is in the description below, and enter your email address so that you can be made aware of any future updates in regards to the trading software or anything else. Okay, so now that that is out of the way, let's get straight into the video. So the ICT Silver Bullet strategy is a great strategy to trade as it's such a repeatable thing to look for over and over again. You can apply it to different areas and times essentially on the market you're trading. So for example, I'm on GBPUSD and I'm going to show you some examples on GBPUSD using recent price action later, but let's go over essentially the fundamental knowledge you need to know before you can start taking and trading this strategy. So this is my own adaptation of the strategy because I can see a lot of people getting confused, and it makes sense to get confused because different people are showing you different ways to use it, but this is a way that I've seen recently that works really well, and it's been working for me for the past, let's say, 4 to 5 months. So what you want to do first is you want to first highlight on your chart significant external highs and lows. Don't worry about the word external and don't get beat up in terms of external and internal liquidity too much. Just think about or look for certain highs and lows that are very distinct, very sharp, and very essentially quick in terms of how price went there and then rapidly moved away. So that's your first key thing you want to look for. Okay, then obviously you want price to move away from it, and so it's an external, and so it becomes essentially a significant high because price has moved pretty far away from it. Next, what you want to do, so after you've highlighted all of these highs and lows, you essentially just really need to wait for price to move towards it and then essentially raid that high or low. I only suggest you to look for these highs and lows on the 15-minute time frame. So use 15-minute structure, and then we're going to be dropping down to the 5-minute for entries and exits only. When it comes to your entry, so what do you want to be doing? So when price comes into this area, essentially you're going to be looking for one thing and one thing only, which is get the raid, price pushes away, you get a market structure shift, and then you're going to enter off a fair value gap. So essentially it's going to look like this. Let's say we get the raid here, price pulls away, we get a breaker structure, market structure shift, fair value gap in here, and then your entries there. So your fair value gaps here somewhere, right? So that's going to be your regular entry pattern. And so if I just draw that out over here, you're going to be entering here somewhere. Just make it a bit more nicer to see. Stops will be, let's just put it here for now, and then your target. Now your target is going to be a fair value gap that has essentially a draw on liquidity. So there's liquidity there or something, or there's something significant, and your target would be on the 15-minute, and you can refine it using the 5-minute. So your 15-minute target. So this was a 15-minute target in terms of a liquidity grab, and your exit's going to be a 15-minute target as well. So you, for example, if you want to hold it for longer, you can hold it to something like this because there's liquidity here, or session highs, session lows, just stuff like that. And obviously I've shown you the short version of it here, but if you want to go long, that's what it's going to look like. It's essentially the same thing, just flip sided. Okay, so that's the, as you can say, the knowledge section over. So what I'm going to do now is I'm going to show you 2 examples from recent price action of how and when to use this strategy. This video is sponsored by Vantage Markets. If you are looking for a trusted broker, then look no further than Vantage Markets. I have been using them since 2018 and have enjoyed using them as my personal broker. They are a multi-regulated broker, and so they are reliable, and I have never had a problem when it comes to withdrawing or anything like that. They also have accounts with low spreads and commissions to make trading all the more worthwhile. So if you are interested, then make sure to click the link in my description to go check them out. Okay, so let's have a look at example 1. So what I've done is I've stopped price action here for a reason, because what we're going to do as the first step is we're always going to look for a significant low or a significant high. So right now we can see, we've got a significant high here, So let's go mark that on. And then we got significant, oops, what's happening there? We've got a significant low here. Now, generally when you get two lows that are close to each other, you want to go for the lower one. And this one looks like the low one, so I'm just gonna put my low there. So essentially what we want essentially price to do now is either take a high or a low. So let's see which one it takes first. Okay, it looks like it's going to take the low, and then we've got it taken. There you go, price is taking the low. So at that point here, where price is taking the low, we're going to use a 15-minute time frame as I mentioned before for structure, right? So we want a break of structure. So if I look here, where is the structure that need broken? So let's just let price ring on a bit more. So at this point here, it would have been this high that I need broken first. Is that lower? This is lower. So now that this is lower, it's actually this high that we need broken. So once this high gets broken, because this high led to a lower low, we want a breaker structure or a market structure shift, whatever you want to call it. Same thing really. Let me just play it. There we go. Now we got that break. Now we're looking on the 5-minute time frame for an entry. So if I look at this leg here, where have we got fair value gap? So we probably got one really tiny one here, but let's say if you don't count it, then let's go for this one here. Right, so this is the next one. So this is where, let's say, you enter from. That's going to be your entry. Let's pull that along a bit more. Yep, that's fine. Entry there. Stop is just going to be below the low. So let's just 8.9. Let's make it 10 pips just for safety. I normally round it. I like 10 pips because it's a trade that we can take for essentially a 1 to 3 or 1 to 5, or hold it more longer term and essentially ride the swing, because we're expecting price to reverse this whole move. And yeah, we should get tapped into this. Let me drop back to the 15-minute time frame. There we go, we're tapped in. We get price messing around a bit, and as you can see straight away, we get 1 to 3. Now there's a reason why I put my target over here, and that's because I like to target session highs or lows. So obviously we entered at the low here, we're targeting the high. Or if you don't want to target the high, a good target would be a 1 to 3 in general, or a 1 to 5. So you can just take it to there, and I'm sure price will come and tap that as well. And as you can see, it does in the same day, which is really good. And that's one example of a trade. Now the next one I'm going to show you actually coincides with a system that I trade normally anyway. Let's go and have a look at that one. So example 2, as I mentioned, coincides with a system I trade anyway, which is the London sweep. Obviously we got Asian high here, Asian low here. It is a small range though, but that's given it was the 28th of December. So normally what I'd look for is a raid of this high, but what I want you to do is look left. Okay, I'm sure there's going to be a significant high to the left that price is actually going to raid, as well as the Asian high. So if I look left from here and I just keep going left, boom, there it is. That's a significant high. Why is that significant? Because it's New York high and it's at 130. So that was some sort of decision. I'm guessing it was a NFP. Okay, no, it wasn't an NFP, it was on a Thursday. So it was some sort of decision that came out during New York, which was very, very significant. So what does that mean? There's going to be tons of liquidity above it. So if I go back to where I am now, look at that. Look what's right above it. Right above the Asian session is that high. So again, what am I going to look for? The same old thing that I've been looking for before. Now, from a target perspective, again, my target's going to be New York low, just because I like targeting session lows. You got liquidity here. You can target this as well if you want to, or go for a standard 1 to 3 or a 1 to 5, or look for this whole move to reverse if you want that to happen as well. So again, let's just do that. Yeah, let's go one by one. We're on the 15-minute. We're going to use the 5-minute to enter. There we go. We've got that liquidity grab. Structure in terms of what we want to get broken is going to be this one. Very clear. Let's see if that gets broken. There we go. Jump to the 5-minute time frame. Do we have a fair value gap to enter on? Yes, we do. This one over here. This is where I'd be looking to enter from. Short from here. Stops just above that 7.8. Let's just make it 10 pips as I did for the previous one, just for continuity. And target will be there. So what's that? 1 to 7. This one's a really nice one. Or if we go to here, that 1 to 3, 1 to 2.65. Perfect. Let's just go for this one, as that's part of my strategy and my system. If I play that, we get tapped in, and then eventually in the New York session of this this day, we get price taps in, and I'm not going to be surprised in this reaction. Price takes the low, takes the liquidity from the New York session, and then it reacts. So it'll actually be this though. This is where the most of the liquidity would be. But there you go. But yeah, so that's the ICT Silver Bullet. That's me essentially adapting it towards my strategy and what I like to do. And as you can see, I target significant highs and significant lows, no matter how far back they go. And I think this is a really good example, because you wouldn't see it if you just zoom out like that. You'd probably think it's this one here, and as you can see, price messes around but then moves up. But anyways, that's the strategy. If you liked it, make sure to like the video, subscribe. Again, go to my website, links in the description, enter your email address, and stay tuned for updates about my trading software. Thanks, and see you in the next video.